Well, we told you how the housing market has been faring this year. Prices up as inventory remains tight. But what about the rental market? As a growing number of young Americans move out on their own, the rental apartment market is seeing strong demand. But developers may have overestimated just how much supply the market needs. Diana Olick takes a look at how developers fared in the first quarter and what that means for renters.
If you're a first-time renter or looking to upgrade to a bigger, newer apartment, now may be your best chance. Demand for rental apartments fell short of new supply by about 100,000 units nationwide, according to RealPage, a real estate analytics firm. Rent growth is also easing.
You can actually get a good deal this year if you're looking to move into one of those brand new properties. A month free, you might get your first month free. In fact, in some places, you might get your first 2 months free once you move into some of these new buildings.
The key is brand new. Luxury buildings are seeing the most new supply and are therefore moving to more concessions. Total apartment occupancy is still high, but it is weakening and has been for the past 6 months. Cities seeing the biggest downturn, New York and Boston. That's where REITs like Avalon Bay and Equity Residential are the most vulnerable, but their stocks are still doing well thanks to the recent market rally and the possibility of deregulation, which would benefit them. Apartment demand and rents are strongest on the West Coast, where REITs like Essex Property Trust and UDR have major holdings. Multifamily overall is still strong, but the new supply coming online this year, especially in major cities, outpaces demand by a lot.
Practically every market, you are going to see softer growth in the urban core. And if we were looking for places where concessions are going to be up and rent growth could potentially be negative, they would be urban core locations across the U.S.
Apartment developers are already moving more toward the suburbs where demand outpaces supply and the rental stock is much older. That's where they're likely to see the greatest returns, especially as the supply of newly built single-family homes lags. For Nightly Business Report, I'm Diana Olick in Washington.